New York, back to Riyadh. Thank you very much for joining me. The changing landscape, real estate, and development landscape for tourism. Really pleased with my panel here today. Greg O'Hara from the United States, Hussain Sajwani from the UAE, and Sami Sawaris, most recently, I believe, from Switzerland. Is that right?
I'm still Egyptian.
So let me get, first of all, a snapshot into what you think your lives will be. We heard from the Accor CEO this morning, who told us he was expecting to lose 20% of his business travelers. Martin Sorrell told us business travel never coming back like it was. You all travel for work. You all use Zoom, I imagine. No one really loves it, but it is efficient. So briefly, how will business travel change for the three of you? Greg?
Well, it's part of our core business. I'm the chairman of American Express Global Business Travel, which is probably the biggest business travel company in the world. And so we're writing a recovery in business travel of 80% in 2019 and 2023. So I agree with Sebastian, I usually do anyway, but I agree with what Sebastian said this morning. We think business travel will come off. We've got a pretty good beat on that because we can actually poll the companies that we respond to. But I think it's going to come off in different ways. The biggest thing you'll see, I think, is a big decline over the next couple of years in large meetings and events. And that's usually responsible for about 30% of business travel.
Okay. Hussain?
I tend to agree. I think we see a drastic demand, lower demand for the business travel. It will be there, but instead of me making 10 trips in a year, I probably make 5 or 6 and substitute the other 3, 4 with Zoom. Zoom, as you said, has major factor, and we were all uncomfortable to use this technology 2 years ago. Now, every day I have half a dozen Zooms at least. So business travel will come down. I think the tourist industry will see some shift from cities to more resort places. People more and more explored in the last 1 year islands and resorts, and they find them more safe and more relaxed. So I think it's not a good news for the hotel industry from that point of view. If the business traveling comes down, if even tourism become less in the cities and more on the skirt of the city, there will be some challenges.
Sami, what do you think? What about this trend towards the longer stay? So you combine some business with maybe some family time.
Well, we felt it already now in the past year in all our resorts that the average stay has mushroomed. You know, people that came booked for a week ended up staying for a month. People start booking 2 weeks, which is something they wouldn't do before. And it's to a great extent thanks to the Zoom and the likes of Zoom that makes it possible. But really also the culture has changed dramatically in a short time, which I was not expecting, which is that if your colleague or your employee would tell you, I'm going to stay home these next 2 days and work from home, you would probably start thinking about replacement. Now that it has been obligatory and it has been commonly accepted, people don't look at it as a taboo to say, I don't need to be in the office, I can do it from El Guna, you know, I can be in the resort, my family is having a good time, and I'm sitting in the room fixing things and writing memos and Zooming left, right, and center. So the extent of stay is going to increase a lot.
Okay.
We feel it, but business travel, as the two colleagues said, will suffer tremendously. I don't agree about conferences, because the conference business has always been a networking opportunity for many people and a kind of a compensation for a lot of attendees. And I can imagine that many companies will continue to do it because it's a kind of a freebie that is not really officially a freebie, and people want that. So I think there will be more of a rebound for the conference business, but not the business travel. I think all the hotel owners of business hotels better start thinking about other activities within their hotels, turning some of the rooms into residential, renting out for longer stays to people that like the town itself, but to depend, as before, on the rack rate for business travelers who come 2 days and 1 day and 3 days and stuff, that's going to be quite unacceptable. Because if you, again, one of your employees tells you, I'm going to Paris to meet Mr. So-and-so because it's a very important client, you're going to tell him, what? Just Zoom him. That's enough. You don't need to travel, and the company incurs a cost of $2,000-3,000. Just call him.
Greg, you've just raised a fund, $1.5 billion, committed about $500 million across 4 different deals. I may be a day or 2 behind. You may announce something more. But tell me about what you're seeing and why those deals.
So that's our distressed fund. That's the newest fund in the family of funds, and it was designed because starting in March of 2020, I was getting 2 or 3 calls a week from people who needed capital, and I only had equity funds, and I didn't have a way to help them with the rest of their capital structure. So we did 2 airline deals, a cruise deal, and a rental car deal. That allowed companies to have the working capital to last out the crisis. We're working with several governments now. The $1.5 billion represents the equity component. We can actually lever it from there. So we're working with a bunch of governments right now to put in like travel opportunity funds, where if you run a tour operator or you run a working capital intensive business, you can get a loan from us pretty quickly. And so the reason we raised the $1.5 billion was really to chase after specific distressed opportunities, and for companies whose current equity value may be worth less than the debt that they have on them. So being able to help them restructure was important.
And how important, when they restructure, relaunch Hertz, for example, is the technological component?
So on almost everything we do, travel is a collection of, you'd have to argue, old economy businesses for the most part. I'm not saying all of them are, but many of them are old economy. And a lot of them haven't had technology investment for the better part of a decade. So whether it was American Express or Internova or TripAdvisor or Hertz, for instance, Hertz will have a whole system revamp. You'll be able to, in the fullness of time, you'll be able to take your phone out. You won't have to go to a desk. You'll approach a car. You'll unlock the car with the phone. You'll get in. It'll have full telematics inside the car. We'll do better job pricing for yield, fleet assignment. A lot of the problems with the rental car industry is there isn't the right car in the right place. And then I think the big push over the next 5 years is, traditionally we have 500,000 cars. We'll have 280 right now. What's unique right now is you can't buy new cars because there's this giant chip shortage. So we're having to make do with the cars we have. But as we start refleeting, we'll probably replace that with something like 400,000 or 500,000 electric vehicles. And we're working with different governments to have infrastructure. But there's a lot of governments that are really interested in the greening of their countries. And it's great to have electric vehicles. And it's nice. Consumers will pay more to rent an electric vehicle. And they're cheaper to operate. So it's better for the profit of the company, better for the environment, better for the consumer.
Hussain, tell me how you're working with government as well. I'd love to hear how in the UAE the private sector is helping build that road to recovery.
I mean, no doubt that Dubai government, UAE government, has done a fantastic job in the last few years, the last 2 decades, and especially the last 14, 15 months since COVID started, how Dubai really zoomed, as they say, boomed and zoomed, with the Zoom. They have shut down the country, 2 months, very, very strict. I mean, I live on Palm. I could not step on the beach. They were that strict for 2 months. But then they opened the country slowly. And December, I never seen in my life, I've been in UAE all my life, especially in the last 20 years, how busy we were from tourism, from restaurants. Prices of property are going up, especially the villas. Where I live in Palm, property prices gone up by 50%. A lot of people from Europe, from Russia, CIS, India, China, coming to Dubai, not for holiday only, but to live there. People mostly from Europe realize the tax is going to be going up because all this borrowing of and expenditure of the governments, and a lot of them moving to Dubai because, and especially during COVID, Dubai was open, they never thought of the city in that content. So they came and they find it safe, and they find it friendly, and they find it very service-oriented. So really, Dubai is one of the cities benefited the most in the world from the COVID, I think.
And how easy is it to choose what you're going to invest in? I imagine you've got a desk full of investments. What's really catching your eye?
Dubai is a very competitive city. It's a very competitive market. So you have to be very careful. There are people who there for businesses for generations and from around the world. So you have the best jewelers from Beirut and from India and from Belgium operating and so forth, and textile and every industry. So you have to be very careful what to invest in. It could look to you beautiful, and you could lose a lot of money. But the people who know their business, they know what they're doing, they make a good amount of money. But it's a very mature, sophisticated, well-regulated market.
Sammy, tell me what's on your mind. I know that you think a lot about co-investment, for example. How can we encourage governments to partner with people like you?
Well, I think the road to recovery of the private sector, the traditional private sector, involvement in investments to grow the country's tourism sector or real estate sector is going to continue to suffer. That's why, for example, he could raise a fund like this because guys like us are not making a lot of surplus, which traditionally we would just reinvest. So even though we're bombarded with opportunities from left, right, and center, but we don't have our own resources, not to mention even greenfield projects. Because, in many cases you have opportunities that are far below replacement cost, popping up from right, left, and center, and then you ask yourself, why would I start something new when I could get a distressed asset, fix it in no time, and run it? A very good example is my travel company. I have this German tour operator that we took over during the crisis, and these guys are bombarded by their clients. They move 5 million tourists every year. So you can imagine that all the hotel owners are begging for clients now that COVID is starting to be over. And of course, under normal circumstances, we would be taking up these chances to invest in these hotels partially or wholly or whatever. And now, of course, we've had 1.5 years with 0 clients almost. And from 5 million to 600,000-700,000, you can imagine the accumulated overheads, all the debt that we had to take on just to survive. And then somebody comes and says, please be my partner. We tell them, sorry, we don't have money.
Yeah.
So even for greenfield projects, where a lot of governments are now very eager to attract new investors, they will find that most of us are not really able to put aside the amounts that would be needed for such fresh investments. So unless governments actually get engaged with private sector players that come with their connections, with their know-how, with their experience, to do it with them, it will remain a government-sponsored industry, which is obviously not the correct way forward. There's nothing better than having someone's own personal money involved in a project so that you can sleep, because he won't sleep.
I want to make sure you have my number for all those opportunities you're not investing in, Sammy.
Oh, I didn't realize about this story. It was on my mind. We have to talk.
Okay.
Because it's really very often nowadays, it's sad. I always say, imagine if you had the same cash flow that you had 2 years ago, how many amazing opportunities you would have picked up. Now one has to be so stingy with the investment money because you have a lot of opportunities, and you don't have the heart to take the cash out of a company that's not really making a lot of money these days. You know.
I wanted to talk about airlines, Greg, because you've taken on 2, I believe, in the last few months. Now, this is a pretty worried industry, but it is absolutely necessary to get the world moving again. What do you think the biggest change is going to be in terms of where you're putting your money and therefore where the airlines will be investing?
So the 2 airlines we invested in were, I think, one of the largest shareholders of Azul, and we did the DIP financing for LATAM. Latin America had different...
Azul is Brazil, is that right?
Azul's Brazil, yeah. Latin America had a different distressed opportunity. And what's interesting about airlines is there's all kinds of ways to lose money and there's all kinds of ways to make money in an airline. I'm looking to see if Akbar's... No, Akbar's not here, so I can talk about airlines, because otherwise we'd have to ask him. He's smarter than I am. One of the things that happened in Latin America is inside of, this is anecdotal, but inside of every aircraft, there's seats and there's cargo. And what happened is, as they reduced the amount of seats available, the price on cargo went way, way up at the same time. So what ended up happening is, in Latin America, you fly perishables north and you fly durables south. So the cargo planes are loaded both ways. So my investment are both secured investments. They're secured by the cargo businesses of those airlines, and the cargo businesses in 2020 made 4 times what they made in 2019. So it was an easy investment to make. If we flew the passengers around for free, which if anyone's listening in Latin America, we're not doing that. Right. But if we flew them around for free, we would have done well. So I think. You know, the secular trends, we heard them today, everyone's right. Wellness is a secular trend. Mr. Sajwani owns a beautiful resort in Switzerland called Andermatt, and it has a great hotel, great spas, outdoor activities. I'm selling it for you, Sammy. So. And so things like that, destinations like that are going to be correct. My colleague here said that people are going to they're going to stay away from cities and go to resorts and things like that, and that's going to be destination tourism. We're seeing a huge pickup on that. Like, for instance, in the United States, try to rent a car in the United States anywhere that they're all sold out every weekend, all the time. You can't rent them. So I think wellness will be a big thing, destination, activities, you know, and then I think people who are going to get capital and people who are going to get tourists are the people. I don't know how everyone else said it. I say it like certainty, right? So for instance, like if you had told me, all due respect to the rest of the EU, if you had told me that 3 years ago that Greece was going to be the shining example of economic and fiscal discipline and could manage through a crisis like this, I would have said never. So the Prime Minister and Harry and those people have done a great job. So we're seeing Croatia, Iceland, Greece for this summer, bookings off the chart, and the only thing those people have in common is that you know exactly what you need to do to get there, and you can do it, and you can come back, and they can charge almost anything they want. And so I think there's a lot of capital that are going to go to governments, to Mr. Sajwani's point, that are going to go to governments that can provide certainty and sensibility to the traveling public. If you do that, you'll get the visitors. And we're seeing that in Saudi and UAE. UAE did the same thing. Like, it might be difficult to get in and out of Dubai, but you know what you have to do, you know what you have to test, you know the app you have to download, so people go.
It's also this idea of digital nomads, right? I can work from home, so why don't I come and work in Andermatt or in Dubai? What can governments do along with the private sector to encourage people to do that?
To encourage to work from home?
Well, but from Dubai. So if I live in London, why do I need to stay in London? I could move to Dubai for 6 months.
They want your money.
I mean, some of the decision Dubai government or UAE government has taken in the last 12 months were amazing and were shocked to me, even though I live in that country and I was born there. For the last 10 years, the debate was going on that foreigners can own 100% LLC company. It was not allowed, only 49. They took a decision 6 months ago. Foreigners can own 100%. That's a mega decision because we have surveyed around the world and looking for a place where you register a company where you pay zero taxes and own 100%, and there is none. Ireland, you pay 12%. Luxembourg, you pay 7, 10, 12%, or dividend tax. Dubai has zero dividend tax, zero corporate tax, and now you can register your company 100%, which is a major decision. Another decision they have taken, they're now giving passport to a lot of people who've been in Dubai for more than 20 years, which was never happened before. Apart from, of course, you can buy your own house and freehold and all that. So from that point of view, Dubai is very much welcoming foreigners, and other people feeling very comfortable. I have met dozens of people in the last 6 months from different parts of the world. They're moving their families, and they're buying homes in Dubai and moving their businesses.
Thank you so much. We're out of time. Thank you very much, gentlemen, for your time talking about investment in the future of real estate and tourism. And next up, I am delighted to hand over to Jane Witherspoon, and she's the bureau chief in Dubai, Euro News.